Hello everyone and welcome to 5 Minute Business Case Studies. Today we are going to discuss about the problem in Indian startups. The unfortunate reality of Indian startups is that we have had far too many allegations of financial fraud in the recent months. From Bharat Pay, Trail, Bikai, Go Mechanic, Mojocare and a lot more. And the story seems to be the same for all these startups. Number 1. Sell a fanciful story featuring India's 1.4 billion population and raise money at insane valuations because everyone wants to invest in the next big thing. Number 2. Burn cash chasing growth and customers. Number 3. Draw high salaries for self even if the startup is making massive losses and cash out some of your equity for a big payday. Number 4, when the growth doesn't materialize, fake the sales because you can't afford to look like a failure now. Number 5, when the tide turns, investor turns more cautious. The turn of the money tap and this receding tide reveals who was swimming naked. But here's another problem in the making here. A problem where these same startup founders turn into angel investors. See, founders don't often pump their own capital when starting up. Instead, they go out and tell stories to venture capitalists and raise money. And once the money hits the bank account, they take it as a sign of validation of their business prowess. A stamp that they'll be successful even if deep inside they know that their company is built on shaky foundations. And once that belief sets in, they want to take the next logical step become an angel investor. They want to advise other startups on how to run the show. After all, they can proudly say that they know a thing or two about startups after raising money from the big VCs, right? And if writing founder on LinkedIn is level 1 of the status game, writing angel investor in the bio is level 2. It elevates you in the entire game. Now, here's the issue all these angel investments are actually just VC subsidized money. So, this is what typically happens. Startup founders raise VC money, use this to pay themselves a fat salary, maybe do a secondary and sell some of their equity for cash, and then invest this very same money into other startups and call themselves angels. And it seems like the same story has been happening the world over, and this cozy startup ecosystem has its own problem. Well, VCs aren't blind to such things. They will turn cautious and they'll dial back on the pace of investments. And it seems like it's already happening with the funding winter that we're seeing right now. Most VCs in India had a whopping $23 billion in cash on the sidelines by the end of 2022. So, VCs may look for founders that are more suspicious and look for more red flags and turn on the money tap on even further. Apparently, VCs are saying they need their capital back after the end of 4 years plus a 25% annual return. Otherwise, give us a collateral of personal assets like the house and car too. Other VCs are demanding special treatment. They want to be first in line for a payout when a company gets sold. They want twice the money that they initially invested. This all means that getting funding in these times has become extremely challenging and difficult. But imagine a founder who's desperate for cash. If these are the kinds of offers on the table, the founder will definitely be tempted to take it up. And the problem is that it's terms like these that might nudge them into fudging the numbers because they have to sell a fanciful story to a greater fool and promise their investors what was initially promised to them in form of returns. It is a vicious cycle and a self-propelling vicious cycle which is going on. And this could derail the Indian startup space further. Now, just to make one thing clear, all founders are not the same. We know how hard it can be for a founder to build a company. Many founders toil for nothing on a meager salary just to create something worthwhile. So, when they finally get VC validation for that money, they get it as a reward for all those years of struggle. But we cannot deny that a certain dark side also exists. While some founders are just looking to strike back while the iron is hot, make a quick buck and live a lavish life, and that's the problem that everyone has been worried about. Thank you for watching this video. If you liked it, please click on the like button and share it with your friends. And for more such 5-minute business case studies, subscribe to our channel.